difficult year for the real estate sector. The start of the year was dismal, with sales of homes coming or dropping every quarter. Inventory piling up and new project launches dropping in some cities to half. In fact, I've never really seen sentiments as down as they were in the first 5 months of 2014 calendar year for the sector, not even in the aftermath of the Lehman crisis. Hope and optimism returned with the coming of a new government and with a historic majority. The finance minister brought back smiles to the face of the industry participants by including housing as an area of focus for the government. Tax break limits on interest on home loans were raised, bank financing for affordable homes was eased up, and the goal of housing for all was emphasized. SEBI did its bit by giving a go-ahead to listing of REITs in India. Yet, 6 months hence, the action is missing. The sector continues to struggle. It's yet to claw its way out of a definite slowdown. Hopes are far from being realized. The question is, are we worrying too much? Are there early signs of a demand recovery? Can we hope for a strong demand outlook for real estate in 2015? Let's find out as we step into the new year. From our experts today, Baman R. Irani, CMD Rustamji and VP MCHI Credai, Sanjay Dutt, Executive Managing Director South Asia Cushman and Wakefield India, Ritesh Vora, Partner Real Estate IDFC Alternatives, C Sharma, VC and MD Sobha Developers Limited and Vice President Credai Bangalore, Rajiv Talwar, Group Executive Director DLF, and Nishant Single, Promoter and Director Strategy Investor Clinic. Gentlemen, thank you very much for joining in. As we go through the discussion, some figures which tell you what happened in 2014 will flash on the screen. But I think the larger question is, how are we stepping into 2015? Winds of change, are they blowing? As I just read a report, inflation is down, house price, that's a big component of house price. That's come down to lowest level. We're also hearing that property buyers are back in force just a little bit. Let's start with the Mumbai market. Baman, what do you feel? I remember speaking with you about 6 months ago when we looked at the Mumbai discussion or just Mumbai real estate market, and you said things are beginning to look good. But 6 months later, they aren't as good as we hoped for, isn't it?
Well, Manisha, the strategies that have been taken up by certain developers is definitely bearing fruit. You've seen that, even the commercial real estate demand is high in a place like Mumbai. Residential in the affordable bracket, that is to say, ticket price being what the consumer can afford, is seeing a good amount of inquiry. As a matter of fact, certain pre-launches by developers have seen extremely good, volumes traded by them, or flats actually purchased by end users. While the sentiment on the investor side is extremely low at this moment, but on the actual user side is extremely high. And I would like to say, Manisha, actually the Mumbai market is doing a lot better. And in the year 2015, with the state government, going ahead and easing up a lot of the, we're looking forward to easing up a lot of the approval processes. You will see a very good healthy supply coming in the market, and this healthy supply will also add to the consumer interest, because the consumer will then get a varied choice. And areas that they've been waiting for, for a long time, a lot of projects have been announced but have not taken off. And once they take off, then the end users of those projects will also start making a beeline towards those projects. And I think 2015, the first quarter may not exactly be the best, but starting the second quarter, that is to say, in the calendar year, starting from March, I do see a healthy demand growing in the Mumbai market as such.
Okay. Mr. Sharma, you, of course, in Bangalore have had it easier than the rest of the country because you didn't have so many investors in the market anyway to drive up prices to irrational levels. It's been slightly easier. The downturn hasn't been felt as strongly in Bangalore, but then yet every developer has accepted that sales did slow down quite a bit in 2014. Now, are you beginning to get those inquiries that we hear about? And how would you, let's say, put it? Is it to the levels of 2011-12, or do you think that it will take a while before you get there?
Manisha, in the beginning you articulated very well. We did believe that 2014 will be a year of turnaround and hope. Somewhere, as far as the operational performance is concerned, India as a whole has disappointed as far as our numbers are concerned. We do believe that primarily it is on account of lower than expected performance from the largest market, which is NCR, and the Mumbai market. In the southern market also, the Chennai market has not been doing well, whereas the Bangalore market has been holding on very well, both on the commercial real estate as well as from the real estate residential perspective. We also believe that we could have done much better because the number of launches have been quite a bit. We also believe that this year we have been responsible enough in keeping the prices affordable. So with the prices being affordable, with inquiry levels remaining very high and an actual user-driven market, Bangalore still could have done much better than 2014 as it is ending now. But it is just like the hope remains, maybe that darkness before the dawn sort of a thing. So 2015 is definitely expected to be a much better year, and the ground realities could not have been what we have expected better than that. Everything is falling in place. It is just a question of demand coming back, and should happen maybe with the interest rates coming down and the budget giving us some kind of a further fiscal incentives.
Okay, fair enough. So you're saying that you can see light at the end of the tunnel, and very, very soon. Rajiv Talwar, NCR market, all data and facts point out to the fact that this was the most stressed market. Of course, we also have a huge community of investors, and that's probably the reason it took the biggest knock. What about the NCR market? Do you think the pain that this market fell is going to take a longer time to run its course before it starts rebounding?
No, I think that there are already positive signs. There's traction in the commercial leasing space, which means that the economy is on the go, is on the rise. And once that happens, then it takes a little bit of a time gap before the residential demand picks up. And I'm sure, as Bowman very well said in the Mumbai market too, that yes, I think beginning the new financial year, which is FY16, that's the second quarter of the next calendar year, I think we should see much healthier sales, and we should see many, many more launches in the NCR market. As you are well aware that there is a large inventory which is to be handed over. In fact, we alone as a company are handing over in the year 13, 14 and 15 calendar years, maybe the first quarter of 16 too, calendar year, about 61 million square feet. So I don't think there's a dearth of demand. It is very true that the demand would be much higher in the affordable sections, but I'm sure it will cut across all segments, and we're going to see, with the government taking many, many steps, as you've listed out before, as are now becoming visible more and more in the REITs market and in the infrastructure investment trusts, plus funding of the infrastructure as announced by the Reserve Bank of India, I think we will see a general move up in the economy and the rate of growth. That should only augur well for home buyers, whether anywhere in India, and especially the NCR region. All
right, Sanjay Dutt, developers always optimistic, and that they have to be, isn't it? But if I look at the figures in front of me, look at the steep fall in absorption, 14 to 37% are the kind of figures floating around across cities in India. There is, as Rajiv Talwar said, a huge amount of inventory which still needs to be absorbed. So you sum it all for us and tell us what are the good reasons to hope for a home buyer, even an investor who's been locked in and his property isn't going anywhere. What is 2015 going to offer him?
I think, Manisha, the only disagreement that I have with the majority here is I do believe while there will be traction, commercial is bouncing back, and there is enough signs from the government, from the central government bodies, that this is also going to create into some traction for housing sector and real estate sector on the whole. But I think all of this will bring enough traction towards the fourth quarter of 2015. So I think what you see on the ground today is going to continue till June, the first half of next year. And while all the good steps and measures, and the government will be conscious and will announce a budget which will bring more traction to the economy, will eventually lead to good results by the second half and more likely to be towards the fourth quarter of next year. Okay. And this is purely because of lead time that it takes before the policies and initiatives actually translate into results on the ground.
Nishant, what's your view? You actually are in touch with the buyers. Do you think that it's just inquiries, or do you think these inquiries are actually turning into deals getting executed and sealed at the ground level?
So I would talk about the NCR market specifically. In December 2013, we clocked our highest ever sales of 1800 transactions in a month, which was worth about 900 crores. Till July, this volume came down from 1800 to about 900 units per month. And in October, it again went up to around 1200 units. So I agree with majority of panelists here that there is definitely a pickup. What I want to stress on is that this inventory built up indicates one clear trend, that it was very easy to raise cash flows from new sales for developers. So you saw a lot of new launches and developers were collecting 20-25%. Because of fall in new launches, developers have realized that the only way to raise cash flows is now to construct, to build what they have already sold. Yes. So what has happened over last 18 months is that you will see all developers concentrating on construction and delivery what they have sold in last 3 years. I know only 5 developers in NCR who would be delivering 60,000 to 80,000 units in next 1 year, which is a very, very good sign, which brings a lot of stability to the market and makes the market ready for next boom in coming 24 months.
All right, so we will come back and examine the figures that you've given are extremely interesting. So yes, there's been a cycle in terms of apartments sold, but you're saying that there's been a fall in new launches and the only way for developers to go is to construct what they've already sold, and that's the way they're going to get the money. Though of course, it's a larger question that it still gets stopped when 90% of the money is in and construction's only 50% done. Ritesh Vora, what's your own take? I mean, on the deal street, things haven't been so bad. Suddenly, there are great deals available for all investors, PE investors and debt investors. Look at it any other way. They've never had a better year than 2014 to actually be able to drive hard negotiations with developers. What's the turnaround you see in 2015 and how soon?
Manisha, I probably don't share the level of enthusiasm and optimism that's going around here at the moment. Primarily because I think, there is a fair amount of pain that has been built into the system in terms of the inventory levels that are there in most markets, maybe except for Bangalore. And I think, while the macroeconomic framework with the new government, with the new budget, hopefully with, a better growth number, etc., is likely to be in place over the next few months, I think what needs to be done is probably that we as an industry also needs to look at ourselves and see whether we are putting in place the building blocks that are required for a sustained recovery in this particular sector. I think primarily there are two things. The fact that the residential real estate sector in most markets is in a logjam is because of the affordability issue. And affordability is primarily because A, prices are high, and B, income levels are not going up. And unless and until that gets resolved, I think it's going to be a while before we see the markets coming back to any sort of buoyant absorption levels. Mm-hmm. For PE investors, while it may be a good time to drive bargains and get good deals, ultimately we have to realize that our cash flows have to come from customers. People have to go out and buy those apartments. They have to put down the money that's required for the down payments and get those home loans. And only then will the business actually see substantial cash flows through which PE investors and lenders can actually get paid. So fundamental to our success is the success of the business. You can't have a situation where PE investors are making a lot of money, but the real estate business is not. I mean, that could happen, but that will be successful or valid only for a very short period of time. Okay. So I think, fundamentally the business cash flows have to improve, for which I think there needs to be some behavioral change from the developer community, from the investor community, which hopefully, one is hoping that will come into place over the next few months if the pain continues to be there.
Okay, fair enough. We're going to take a quick break. We've got the opening comments from everybody, but then I think the larger question that we need to ask is, what is the price point at which buyers will come back into the market? Definitely, everybody is talking about the fact that affordable housing will be the flavor of the season. Now, affordability is different for a poor man to a middle-class home to, let's say, a high-net-worth investor. So what is it that will actually be the one which will sell? What should developers be launching? And also the larger question, what happened to prices in 2014? Which way are they headed in 2015? Because that's exactly what you want to know, isn't it, when it comes to Outlook 2015 on real estate. Stay with us. established on how difficult 2014 was for the real estate sector. Residential markets of top 6 cities were extremely volatile. Both demand and supply were not something to write home about. New launches fell and all of that. Now, 2015, we are facing that. What happens? Investors, of course, who got locked out in markets as NCR haven't been able to find an exit or make the humongous profits that they had been used to. Some markets like Bangalore have always been stable and continue to remain stable. Some markets like Chennai were so dull, one was wondering where real estate is going. So it's a market for end users. Are we establishing that it's the end game for investors in real estate? The days are just gone. I think that's the larger question which needs to be asked. Nishant, over to you first. No longer a game for the investor who was used to that 17-18%, a retail investor who had got used to mouthwatering returns in real estate.
To some extent, I agree that people used to make they used to just put in 30% and they used to get out of the assets within 6 to 9 months. So that game is definitely not there in the market. But what you are seeing is a buyer's paradise. Inventory pile up, unsold stock of 48 months. It's a perfect buyer's paradise. So while everybody is talking from developer's perspective, if we look at it from buyer's perspective, it is a perfect timing for an end user to get in the market and buy their dream home. What developers are clearly saying today is, if you see the subvention prices, specifically in NCR, that developers are ready to offer the rates which were prevalent 18 to 24 months back, and they are just adding the cost of finance of last 2 years and they are offering the same rate to buyers, which is very, very fair. And you know, if today buyers get into these assets, construction is already 50 to 60% done, so they are taking much lesser risk as compared to the risk which people took around 24 months back in pre-launches. So what I would say is that 2015 is a buyer's paradise for at least next 9 to 12 months. Take your buying decision.
Okay, Nishant has said everything that has made at least all the developers on the panel smile a little bit. But Rajiv Talwar, I mean, really, so we've driven out all the investors in the NCR market, haven't we? Now, at least 2014 has worked very well to mellow the expectations from real estate. Now, my big question is, it was one of the favored asset classes for Indians, wasn't it?
Yep.
It's lost that glory.
It hasn't. It's still the biggest financial and social security. And therefore, it will remain the same. Yes, the greater the supply, the more moderate the prices, growth in prices will be moderate, and therefore the returns will not be, as you had said, huge returns, but they will always be there, because eventually it's a licensed sector and licensing somehow keeps shortage of supply. And that's what accounts for the main increases. If supply opens up, if new areas open up, new launches come in, I'm sure prices will be stable, and that's very good for both end users as well as investors who are now hoping for a long-term gain and not a short-term increase.
Long-term gain. Now, the only thing is, when you're looking at stock markets which are giving you fabulous returns and wondering, Baman, real estate isn't figuring at a very fancy place right now. Are we actually saying that, look, real estate has become an extremely high net worth investor game? Maybe if REITs get listed, if not in 2015, by the end of it, that's the way for them to go. Just buying a flat and hoping it will give you 14-15% plus returns and sitting on a hard asset, that game is definitely over.
Well, Manisha, actually, you're asking the question in too many parts, but let me answer you this way. Exactly what Rajiv said. Real estate will continue to stay an important part of any investor's portfolio. And just because at one point of time in an immature market there were some very fancy returns doesn't mean that those going away will take away the luster from the industry. Now, as far as I'm concerned, my view is that the investor has to undergo a change, either reduce his expectation and start investing over a longer term. The speculative 6 months, 9 months, 1.5 year kind of investment in real estate really needs to change itself in a mature market. And we can look at investors coming in for a period of 3 years to 4 years and getting a very good return. And let's never forget this. Real estate is the only real investment one can and should make. And in a country like India, continuously going to grow, with income levels continuously going to rise amongst the people, we should continue to treat this industry as something that will bring us a long-term continuous return in our portfolios. If we take this mature view, I would advise everybody to continue to grow their investments in this business and reap the benefits over a longer period of time.
All right, Sanjay, break it up for a retail investor. I do agree with Baman. I threw in too many questions, commercial REITs, just all of that. But just let's go back to a retail investor who actually used to buy a home to live in and then also look at least one more home to as an investment, sometimes even two more homes if they were in NCR and had a reasonable amount of income. For them, how is 2015 onwards going to pan out? What is this long term? Is it 3 years to 5 years? What is it? And what kind of returns? Is it 12%? Is it 14%? Because in some markets, returns have been even lower than FD returns.
So you're right, Manisha. I think the retail investors who invested last decade or so saw those multiples in a very short period of time, and therefore that momentum and that kind of return will no longer be able to come. However, there will be a return, and I think it depends how the GDP goes, and I think there is every reason to believe that it will grow and we will have some economy bounce, and therefore there will be traction. But I think all those who have already a large portfolio of assets, they have to move on now. There's a new, fortunately we are a young country, there will be new wave of investors and young talent which will see industry absorb, create jobs. So if you see traction in the market, it will create jobs. So we will see some kind of new buyers coming in, embracing all the inventory that you see in the market. But to answer your question correctly, this country is seen multiples. They don't measure annually. So you see Meri property double ho gayi, that double may happen in 5 years or 10 years, or may happen in 5 years, but they have not sold that apartment, and over a period of time the value has stagnated or actually has come down. So the returns have never been, with the exception of few pockets of time when they did 2x and 3x multiples, lately have not been that great. And I think going forward, they will not be less than 5 or 6 years, except some exceptions that may happen in key markets where there's a lot more traction. And I believe there may be some higher returns for premium, exquisite, prime properties where there is more money chasing and less number of quality goods. Mm-hmm. Because what I've seen over the last 3 years, the developers have consciously launched those projects which suit a new appetite. Lesser sizes, smaller units, no frills, more basic, more able to appeal to large masses. And I think that product has gone well and they've achieved good results. Okay. But I think going forward, there will be a segment which will look for prime asset. We know Golf Road, for example, in Gurgaon, continues to hold the price, while other markets like Dwarka Expressway have actually gone down and there's a lot more stress over there. You will see likewise in Mumbai, likewise in Bangalore. So there'll be some differentiation, but I think those good days and returns are long over. I'm hoping some average increase in salary increment which we will see in Feb and March, if it touches double digit, which has not happened last 3 years, there will be some more traction than what we saw in 14.
All right, so very, very closely linked to how the economy grows and how the job market picks up. Ritesh, any counter argument to this? You've already said, look, there's going to be a lot of pain, and if there is a revival, it's going to be end of 2015. So even as a buyer, if I had to go out and look for great deals, there shouldn't be any hurry, isn't it?
Yeah, sure. I think, the level of pain, the level of inventory that is already built out within the system is not going away in the next 3-4 months. So I don't think there is any mad rush to go out and, acquire a property right away because prices are about to rise from tomorrow onwards. As Sanjay said, I think, it's all linked to the GDP. It's linked to salary increments. Unless and until, those actually rise in tandem with how the prices of property have grown, affordability will continue to remain an issue. And I think that's going to be a while before those two numbers are in sync, unless and until prices actually correct, which at least for the last 12-18 months we've seen some pockets of correction, but more often than not it's been a time correction where you had the same price at the start of 2014 and at the start of 2015 again it's the same price per square foot. So effectively you've gained whatever the inflation has been during this particular year. I think largely what has been seen in 2014 is that most of the sales sales in many markets have come through at times of either pre-launches, when people have seen that, okay, the market is at 6,000, I'm getting something at 5,005, or it's been where developers have come up with some schemes, subvention plans, stamp duty exemptions, etc., where again the investor or the end user has seen that, okay, he's getting a real benefit of maybe 10-12%, or that he's taking lower risk because the developer is actually footing the bill for his EMIs and the interest till the time construction is over. I think, it's going to be some time more before these schemes continue, before, you see the normal market coming back, where, at an effective price, people start to buy units just like they were doing a couple of years ago. But certainly, I think one thing I can say is that, speculators who were looking to come into the market with a 3 to 6 month time frame, especially in the NCR and to some extent in Bombay as well, are certainly not in the market anymore.
All right. Let me ask Mr. Sharma. Mr. Sharma, we talked about the young population. In fact, the big buzzword is the millennials, isn't it? The people who were, or the Indians who were born between the years of 1980 to 2000. That's the big market that everybody wants to capture and get into the fold. Real estate, somehow, I've just not heard that buzzword. You're living in a city and making homes largely in a city with a very young population. Tell me, what are the key themes of 2015 which will catch the imagination of these youngsters?
As far as we are concerned, we are going ahead with those aspirational home series, where we'll be launching a project where 7,000 apartments will be constructed in one location. The sizes will be 650 square feet, 2,000 and 1,200 square feet, 1 bedroom and 2 bedroom apartments. And the prices also will be about 15% lower than what we are selling currently. It will be a precast technology in a good location, and we believe that these kind of products definitely will ensure that this younger generation should be able to buy homes at a much younger stage of their career than to wait for next 5 to 10 years and pay a hefty lease rentals which can be converted into their EMIs.
All right.
But coming back to your first question, right, what I could sense is that in India, the Indians' love for physical assets, whether it is gold or real estate, it can never go away. Number two, with the increments going to double digit and inflation coming back to zero, I don't think that we need to be unduly pessimistic about the real estate market coming back to life.
Okay.
Number four, if you look at internationally also, the Indian real estate prices are at its lowest point vis-a-vis the affordability. So from here onwards it can only go up until the land prices and the duties on our products remain at this level. We cannot expect prices to come down.
Okay, fair enough. All right. So two things that are not in the developer's control, we keep them out. We're going to come back and basically also get a sense of, we've got on to some of the key trends and what's going to sell in 2015. We'll come back and explore that more and also ask each panelist to put their money on some of the key markets of India. Which are the ones in the key micro markets, locations, which are the ones to keep an eye out for when it comes to outlook of 2015 real estate or property markets across the country. Stay with us. Our special debate on outlook for India's property markets in 2015. So we have covered a lot of ground here, established that there isn't really room for prices to crack down further because land remains scarce and not easily available. There is also a cost of licensing and approvals, though there's a lot of inventory which is going to come into the market in the next couple of years. It couldn't be a better year for buyers, at least with inflation dipping down to zero and hopefully economic recovery taking GDP growth to plus 6%. On that hope though, what is it that will actually be the best when it comes to property? Which are the markets? What are the trends? What is the sweet spot? Are some of the questions we still need answers to. So Sanjay Dutt, let me start with you. You did say smaller apartments. You did mention that the younger workforce, which will get some good let's say, salary increases. Even I've forgotten the word salary increases for a long time, but yes, they will come back. What else? I mean, what are some of the things that a retail investor should keep an eye out for, some of the trends which will help him catch the best performing markets?
So I think, first of all, 2015 will be a year of transition. We've seen 45% increase in commercial office space in 2014. You will see additional 20% growth in commercial. You will see approximately 3,000 crores from various funds buying 20% discounted residential inventory to begin with. And then you will see the traction in the economy and the demand overall and the job satisfaction and the growth leading to better growth. So we will move from sales velocity in 2015 to then maybe towards the end of the year, some, price upward trend or certain markets, not holistically across the country, but some micro markets completely. If I was to put my money today, I would put in Gurgaon and Mumbai at practically 20% discount to current rack rate of the property value.
Gurgaon, great. Mumbai is too large a market. Come on, Sanjay, you got to give the viewers there a slightly...
I would put in suburbs of... I would put suburbs, Manisha.
Okay.
And it will be, markets like Goregaon and Mulund. And there'll be outer peripheral, which is always attractive.
All right, Rajiv Talwar.
I can't but help and agree with Sanjay that yes, Gurgaon would be the market.
But in Gurgaon also, Rajiv, it's become huge. There's new Gurgaon, there's Sona Road, there's Dwarka Expressway, where the expressway isn't taking off.
I think there's new Gurgaon and traditional Gurgaon. But of course, I would just change the focus a little bit. I think real estate, housing and construction is going to be the game changer in 2015. The economy is on an upswing, and with government policies really promoting real estate, housing and construction, I think this is going to be a game changer for infrastructure, for key industries in the core sector, and that's what is going to make a difference to India in 2015.
Nishant, 5 key markets to watch out for in 2015 when it comes to property.
I won't talk about markets. What I would say is very simple.
You have to talk about markets. You're the closest to the markets and the buyers.
Very simple things. Forget inventory. Forget 3 English words: inventory pile-up, inventory overhang, unsold stock, and decline in new launches.
Okay.
Forget history, what has happened over last 2 years. Look at 2015 with a fresh perspective. Get out of your homes on weekends. Start researching, start understanding the property market, start meeting developers, make your own decision whether there are good deals on the table, and if you like, and I am assuring you that you would find very good deals everywhere, whether it is Bangalore or NCR, specifically Gurgaon, Noida. The only thing I would request is get out of your home, start researching and take your buying decision. There are very good deals available. 2015 is a buyer's paradise.
I still need some markets from you.
So in terms of markets, in Gurgaon, I would ask clients to specifically look at New Gurgaon and Dwarka Expressway, where the prices have already corrected by about 20%. Something which was available at 7,000 rupees is now available at around 5,500 rupees per square feet. In Noida, they should look at Central Noida, sector 74 to 79, which is still selling at 4,000 rupees, whereas the Noida Expressway is at around 7,000.
Okay.
And in Bangalore, again, I mean, people have been talking about North Bangalore, Devanahalli, Yelahanka, etc. I would like clients to focus towards the South Bangalore area where all the jobs are.
Okay, see, that's how precise Nishant does get if you drive him to get precise. Baman, yes, infrastructure is a theme that you've spoken about earlier. Tell us, how do you follow that theme in spotting the hotspots?
Well, very simply, Manisha, wherever infrastructure goes and wherever jobs get created is where the market is really going to grow. For an end user, I would say anywhere between the Santa Cruz to Worli belt is very good if he wants to be in the western suburbs. If he wants to go, Thane is something that will continually grow as a market. Lots of supply coming out there in terms of both commercial and residential. And then if you want to buy in the value for money or the cheaper affordable home segment, places just outside of Mumbai in the Vasai Virar belt will always continue to be attractive. And more importantly, if you're looking at, I mean, you've got to change the way you look at this, but if you're looking at, even going ahead and investing money in something that is a second home as of right now, I can assure you with the infrastructure that's developing, be it roads, be it railway connections, anywhere in and around Panvel, where, a second home would be available very cheap today, would become a great value investment in the future.
Fair enough. Ritesh, final words from you in terms of, retail investor, what are some of the sweet spots in terms of property markets of 2015?
Sure, so as we look at pretty much the top 6-7 markets quite closely, I would put my money actually in Hyderabad. It's a market which has been beaten down very steadily over the last many years. There have been one incident after the other because of which prices have actually not risen in that market for the last 4-5 years, 6 years. So today, if you were to look at the Hyderabad market, residential properties which are mid-market focused, somewhere within a 4-5 kilometer radius of the high-tech city area are actually available at 4,500 rupees a square foot, which, when you compare it to, let's say, a Bangalore or even a Pune, is probably about 30% cheaper for a like-for-like property. So I would put my money on Hyderabad, and I think given the fact that all the political issues are behind you, job market is growing, office absorption is growing. So over the next 3-4 years, if one was to take a view, this could be a good market which could actually outperform most of the other markets in the country.
All right, final word, Mr. Sharma. South Bangalore has been taken or picked up by one of the panelists here. What would your key markets be in Bangalore to watch out for?
The South has been traditionally a good market, but it's the outer ring road, Whitefield, Sarjapur road, which should be giving the volumes to the Bangalore developers in 2015. And since North is becoming a destination, Devanhalli side, Yelahanka side also, that side also will start showing growth over 2014.
Okay, fair enough. Surprisingly, nobody said Pune, though into 2014, Pune has been one of the markets which has really withstood slowdown. But then there's another day. We will look at Pune as well. So the trends that I've caught today are, of course, stick with some of the big cities. The markets which have been beaten down and offer affordability are the best markets to keep an eye out for in 2015. Gentlemen, thank you very much for joining me on this Outlook 2015 debate. Happy New Year from everybody. It's the property markets, happier times to come up. That's what we're hoping for. And of course, the millennials, as we touched about, the Gen Y, those born between 1980s to 2000s, I was actually hoping to see that developers come out with great schemes for this new market, which is not only opening up, but it's a huge market already existing. Easing of credit, homes which offer value for money, and most importantly, transparency and professionalism. That's also something that Gen Y and millennials want. Hope the industry can get that bit right in 2015. Wishing all of you a prosperous, peaceful and successful 2015. Goodbye.